This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pashurudis. Thanks for joining us at XM.com. Markets were looking a lot steadier on Friday as the global rout in equities began to subside and demand for safe havens waned slightly. Stocks have been on the back foot since the end of March. But the sell-off accelerated last week after the Fed hiked interest rates by 50 basis points for the first time in 22 years, raising the real prospect of stagflation, as there's yet to be any convincing sign that price pressures are easing. The S&P 500 and NASDAQ 100 touched 1 and 1.5-year lows respectively on Thursday before staging a last-minute rally to erase the session's losses. Their futures are trading more than 1% higher today, and European indices have opened with similar gains. Fresh from his Senate confirmation for a second term as Fed chair, Jerome Powell yesterday reiterated that the Fed is not actively considering a 75 basis points hike, but neither did he rule out the need to do more. In the world of FX, the brighter mood weighed on the safe havens US dollar and Japanese yen, but boosted the riskier currencies. The dollar is broadly softer today, although it's comfortably on track to achieve a sixth straight week of gains. What's interesting is that the greenback has kept climbing even as Treasury yields have reversed lower this week. Growing fears that the major economies are slowing and could tip into recession by year-end is behind these latest risk-off moves, as even the ECB has now abandoned all hope that inflation will come down of its own accord and is flagging a July rate hike. The euro plunged below $1.04 yesterday for the first time since January 2017, and sterling breached the $1.22 level. The yen, on the other hand, managed to end its losing streak, restoring its safe haven status on the back of the heightened worries about inflation and recession. But the biggest casualties of the past week's flight to safety have been cryptocurrencies. Bitcoin plunged below $30,000 midweek and is attempting to reclaim that level on Friday. While cryptos have generally been tracking equities lower, their slide was exacerbated this week from the crash in major stablecoins. Tether, the largest stablecoin by market cap, broke its one-to-one peg with the US dollar as investors rushed to pull their funds out of digital assets. This was today's Daily Market Comment. Thanks for joining us at XM.com.